Hey, what's up YouTube? I hope everybody's having a great day, and in today's video we're going to talk about what is going on with the housing market. Let's jump right into it. If you're new to this channel, I do cover some things on real estate. I'm a real estate investor, and so I pay attention to the market and trying to figure out what is going on in the market today. And let me tell you, in the last probably 12 months, we have seen a drastic shift. I'll tell you what, during the pandemic, when everybody was scared, when everybody was uncertain of what was going on, I feel like I got really lucky and I got some of my best deals. Now, the deals that I got, they were pre-pandemic prices. And the reason I'm saying that they're deals is that we haven't really seen an increase in prices for the first half of the pandemic. So if you're thinking of like 2020 into 2021, prices were kind of stagnant. We weren't seeing really much. And then once we got into 2022, things just started to ramp up and prices started to climb. And now that we're out of this pandemic, we're trying to figure out as investors, as homeowners, as somebody who's shopping for a home, what is going on with the market today. And I've been thinking a lot about it. I've been kind of looking at my area where I live and just studying the market, just seeing where the prices are moving. But this is the conclusion that I'm coming to, and that is the combination of rising interest rates and inflation and this instability in the stock market. I think all of that kind of brewed all together. Now we have this very interesting time in the market. When I started to expand my search, when I started to look at market as a whole, this is what I've come to a conclusion of. This is my little chart that I drew here. If you think of the market as a spectrum, if you think of it as, you start out from your entry-level homes and you move to the median, and then you get into your high-end or your luxury home. And I think what's going on now is that because of the interest rates, because of the affordability of housing, the people that maybe 2 years ago were able to afford a house, say in this price range here, well now, because the rates are so much higher, we went from a 3% rate to now a 7% rate. That is a 4% increase, and I'll just show you in a second what that means in your monthly payment. All of the home buyers that were looking for a home in this range are now forced to purchase a home in this range. That's just based on affordability, based on the monthly payment that they're making. And I think if you look at the whole spectrum, you see that everybody kind of gets pushed out towards the lower end. So now that people that were looking for houses in this price range, well, now they have to look for houses in this price range. And then it's all supply and demand. Basically, all of these entry-level homes that would have only half of the demand, well, now they're getting all the demand from folks that are trying to buy a house that were able to afford a bigger house, and now they're forced to get into these entry-level homes. Now, once you get into the luxury market, I mean, these mortgages are like $30,000, $40,000, $50,000 per month. And if you think about what that does when your interest rate goes from 3 to 7%, I mean, it's bananas what your mortgage payment goes up to. So I think where the discounts are happening in the luxury space. And the discounts are happening in the higher end of the medium price homes. And this is where you're seeing price decreases. You're seeing it because affordability is becoming hard to achieve with the current rates. But what you're seeing is price increases on this side of the spectrum. And to me, it makes sense. Unfortunately, this is what we're facing right now. And let me just show you an example here. If we go back to 2020 and the interest rate for a 30-year mortgage was around 3%. If you were to purchase a $300,000 house, you would pay $1,265 per month on your mortgage. Now, fast forward to 2023, when our rate is at 7%, your monthly payment is going up to $1,996. That's a pretty significant jump. That is like $700 that you're paying extra for the same house. So you can see how people who had a budget of $1,300 now are scratching their head and they're saying, wow, we should have bought our house during the pandemic because now we can't afford this $300,000 house. Now we have to decrease our budget. So what house are they buying now? Basically a $200,000 house. That's crazy. That's a 33% decrease on the amount of house that they can buy. And this is what I'm seeing. I'm seeing this high demand on the lower end of the market because affordability is just so much tougher. So what do you do? Where do you take it from here? Let's say you are positioned today and you have, let's say you're expecting a child or you're getting married or you just need a bigger place or whatever your reason is, and you're looking for a home. Should you wait for some kind of correction? Should you wait for, these rates to fall down? I really don't know. It's, everybody has their own crystal ball that they're looking at. You hear a lot of fear mongering. It's going to get worse. It's going to, this is going to be the biggest crash of our lifetimes. I'm a positive person, so I think things are going to get better. I think we'll figure things out. There are people that like to hear gloom and doom for some reason. I'm not one of those people. Looking at things historically, if you look this up, it's basically saying that since this was tracked back, I'm guessing in the 70s, our average 30-year mortgage was at 7.75%. So here we have it, folks. We are in the average. Believe it or not, people in the 80s had mortgage rates as high as credit cards. And that is insane. And if you were lucky and you weren't afraid of the pandemic and in 2020 you refinanced your house or you purchased a house, historically that was the lowest point ever to lock in a mortgage. But yeah, we are at an average. So where do we take it from here? I'm not sure. I'm not going to give you any financial advice. The way I look at it is if we look at historical house prices, they always go up. So it's a long-term investment, and if you need a place to live, this is what you're facing right now. The good news about it is you always have the option to refinance if rates ever come down. Right now, look for opportunity. Look for things that you can afford with your budget, with the current rate. Hey, well, if you found this video to be helpful, I would appreciate a thumbs up. Subscribe if you haven't yet, and we will see you next time.